again, I'm reminding you that if you are asked to calculate cash generated from the operating activities, that is called cash from operation. If you are given profit and loss account and there is net profit, that net profit is always equal to cash from operation. Cash from operation means cash generated from operating activities, provided that net profit has been calculated purely on the basis of cash transactions. And there is no change in any other item. I mean to say any other current asset. I will explain you later why I'm talking about current assets. So I can say if you find any income statement and you find all the cash transactions, that net profit is always equal to cash from operation. Suppose this is the income statement. Opening stock nil, purchases 5,000, expenses 1,000, net profit 3,000. And on credit side, by sales 9,000, and total on both sides 9,000 rupees. You know it very well that all operating activities are put in the income statement. So you can see the income statement now, whether it's purchases or sales or expenses, all are operating activities. And this net profit is purely based upon cash transaction. So this net profit 3,000, I can say this is cash from operation, or in other words, this is the cash generated from operating activities. You know, in cash flow statement, all transactions are grouped in three categories: operating activities, financing activities, and investing activities. Okay, now I'm bringing a bit twist in this question. Suppose this is the profit and loss account. On debit side, opening stock 0, on credit side, closing stock 0. Purchases 5,000, sales 9,000, expenses 1,000, depreciation 1,000, and the net profit is 2,000. Total 9,000. This is the net profit. If I say that this net profit is cash from operation, that is wrong, because this net profit is influenced by one non-cash item, and that non-cash item is 1,000, and that is depreciation. You know, when there is depreciation, depreciation means wear and tear on the fixed assets, and that's a expenditure or loss for the firm, and that is always placed on debit side of profit and loss account because it reduces the profit of the firm. So this net profit of rupees 2,000 is also influenced by depreciation. It means this net profit is not purely on the basis of cash transactions. It's also influenced by non-cash item. So I can't say that this net profit of rupees 2,000 is cash from operation for the firm. If I want to call it cash from operation, I will have to remove the effect of non-cash transaction on this net profit. So let's imagine this profit and loss account is split into two parts, part 1 and part 2. So part 1, opening stock 0, closing stock 0, purchases 5,000, sales 9,000, expenses 1,000, and the net profit, that is 3,000. I'm going to reopen this account, part 2. By net profit 3,000, to depreciation 1,000, to net profit 2,000. What I have done? I have split this profit and loss account into two parts, and this is the previous profit and loss account. But I can say this is the part 1. The net profit is 3,000. You can call it trading profit or net profit before depreciation, whatever it is. It's simple example for you. And this net profit, I am to say of rupees 3,000, is purely based upon cash transaction. So if any net profit based upon cash transaction is called cash from operation or cash generated from operating activities. So this is the real cash from operation. What I have done, I have removed the effect of non-cash transaction on this net profit. So the best way is, if you are given profit and loss count and you are asked to calculate cash from operation, the best way is take the net profit and add all non-cash expenses and losses which are found on the debit side, and that will be cash from operation. So the best way is net profit 2000 plus depreciation 1000, total 3000. This is cash from operation. So what's the formula? Net profit plus all non-cash items on debit side of income statement, and you will be at cash from operation or cash generated from operating activities. So in this way, you will find so many other items on the debit side of income statement which are non-cash items. For example, depreciation, any fictitious asset written off, any intangible asset written off, and you may find some non-cash items on credit side. If you find any item, I mean to say non-cash item, on the credit side of income statement, that will be deducted. So the formula is net profit plus depreciation plus fictitious asset written off plus intangible asset written off minus non-cash incomes, and that will be equal to cash from operation.